Most of the consumption stocks are trading at P multiples which are north of 50.
Absolutely.
That's the benchmark.
Absolutely.
History, since we are examining history here,
Yeah.
historically when P multiples have gone to north of 50, the future returns are always compromised.
Right.
So why do you think history this time will not play for consumer stocks?
Okay. I'll give you an example in apparel. I think overall apparel market in India is about 7 lakh crores. And there is a 8 to 9% growth in the apparel market year on year. So that means about a 60,000 crore rupees growth is there in the market. If you add the sales of all the organized retail, it still doesn't add up to 60,000. So that is the opportunity. So if the opportunity is large, these companies can grow at 35-40% year on year for next 10-15 years also. And that is the reason why the P multiples may not contract, but at the same time, those 50-60 times seems to be difficult.
So for the organized apparel market, and there are a handful of players here,
Yeah.
do you see them growing individually at 20% for next 3 to 5 years?
Yes, definitely, definitely.
Which means if you are looking at buying some of these listed apparel stocks now, and we'll talk about the themes apart from apparel, if you're buying them even at these P multiples of 50 plus, if the earnings growth is 15 to 20%, they can still give you a stock market return of 15 to 20% in 3 to 5 years.
Definitely. Because the P's will continue to be high.
But if you're looking at a market which could be as vibrant as what we've seen between 2003 and 2008,
Yes.
then isn't it time to identify real big multi-baggers? Because 20%, 30%, some would say, may not be the best return in this
Fair
kind
enough.
of
I mean,
scenario.
that's the whole game, right? To identify multi-baggers and to hold on to it during this boom. So we are still trying to do it, and I keep my fingers crossed saying that I should be able to identify at least one or two, because that's more than sufficient. So we're still trying, but it would be in consumption game. That is definite. The space will be consumption.
A thought which I'm getting from a lot of original thinkers is that for those who bought into Nestle and let's say a Colgate or a Lakme, now Trent, that if you're buying into some of the consumer tech stocks now from the listed internet space, essentially you're buying some of the consumer stocks in 1990s and 2000. Let's say it's Zomato or Paytm is not consumer tech, but let's say Policy Bazaar. Would you buy into that argument?
So we are examining those, because take for example, so I have to sort of balance between buying an insurance company and buying an insurance broker.
Okay.
So in that case, a tech company like Policy Bazaar could be interesting. Let me clarify, we have neither bought anything, neither have we sold Policy Bazaar. So we are examining these type of companies, because yes, they can be interesting. So we are looking at tech as well, because as I said, anything to do with consumption. So whether it's a pharma company, whether it's a pharma distributor, whether it's a company like insurance brokers, or even a food delivery. So, but there has to be a cash flow which is not in so distant future, because if cash flow positivity is not there, then I wouldn't like to touch the company.
But Mr. Karmarkar, when you bought into Voltas, that time it was a loss-making company.
Absolutely.
There was no P multiple.
Yes.
So when you were investing with an upside, you were betting on the business cycle to turn. So some of the consumer companies or the fintech companies may not have cash flows today. But if I look at the commentary, let's say from a Zomato or a Policy Bazaar, now you in Paytm, they're giving you a complete path to profitability. So what looks horrible like a hole may actually be a path which will be very different as things progress.
No, I agree to you. So in these type of cases, it's very important to go through notes on accounts, to go through the balance sheet line by line and see whether they will actually be making money. Because many a times there is a lot of things which are hidden in the balance sheet. So one needs to study that. And yes, if you are confident that, I'm not saying that in the next quarter, but even if they start making positive cash flows in 1 year, 1.5 years, I will still be a bet for that.